Welcome to the Newsflash at Commodity TV, ladies and gentlemen. We start with a real surprise, the merger of Denison Mines and Fission Uranium. They announced a merger of the two companies through the execution of a binding letter agreement. The transaction creates a leading, focused, diversified uranium company, combining high-quality assets and the management teams of highly respected companies. Headlining the asset portfolio of the combined company will be two world-class uranium exploration development projects. Well, that's Fission's 100% owned Patterson Lake project and Denison's 60% owned Wheeler project, both located in the prolific Athabasca Basin in Canada. Subject to the terms set out in the binding agreement, Fission's common shareholders will receive 1.26 common shares of Denison for each common share, and of Fission held plus 0.00001 per share in cash. Upon completion of the transaction, the combined company, to be named Denison Energy Corp, will be approximately 50% owned by each of Denison's and Fission's existing shareholders on a fully diluted in-the-money basis. The market cap of Denison and Fission on a combined basis is anticipated to be approximately 900 million Canadian dollars. That's a good size for the funds, ladies and gentlemen. Based on a 30-day volume-weighted average price of Denison shares on a TSX of 99 Canadian cents at 3rd July, the offer implies a price per Fission common shares of $1.25, which is a 18% premium. Maybe a white knight is on the horizon to go for a higher bid? Well, we don't know. We will see. The point is, both companies are still in play. And we move on with Altona Mining. Altona Mining framework agreement signed between Altona and Sichuan Railway Investment Group, SRIG in the short form. SRIG contributes $214 million in cash to the Concurry project, and Altona contributes roughly $38 million in cash. And of course, the project. This means the Concurry project is funded to production through, and the joint venture and SRIG will hold 60% and Altona will hold 40% of the new joint venture. SRIG pays a $2 million deposit. This shows again the quality of the management and the project around Dr. Alistair Cowden. Our third company, Timmins Gold, commenced drifting into the underground veins parallel to the south wall of the San Francisco pit. The drift is part of a pilot phase designed to test the mining and processing of the underground ore in preparation for full-scale underground mining. As announced from previous drilling, 3 mineralized veins near the south wall of the San Francisco pit, which average approximately 4 meters in width, with grades ranging between 2.5 and 5 gram gold. The extract shall be 14,000 tons of ore during the pilot phase and will allow the company to test ground conditions, mining costs, grades, and metallurgical recovery of the underground ore. Timmins Gold plans to process the ore recovered from the pilot phase through selective fine crushing and heap leaching, of course. The pilot phase will take 3 to 4 months to complete, and no net costs budgeted for the pilot phase, as the cost for the program is expected to be more than recouped by revenue derived from recovery of the gold contained in the bulk samples. That's always good. Drill with no net cost and get new access to resources. That was the news from Commodity TV. Thanks and bye-bye.